Alright, traders, I'm here to do another weekly review for the trade that I took and the trade I did not take, and some lessons to learn. This is for the week of February 14th to February 20th. I'm just gonna drag the new screen from Forex Factories so you can see. So this week, this is our important news from Sunday to Friday, which market just closed. Right now I'm recording at Friday 2:53 p.m. Not yet closed, but I finished all the news today, so I'm just gonna record it. That's just for the fundamental side first. The eligible one, as you can see, the Japanese yen was eligible in terms of fundamental. There was 20% differentiated, but there was no trade in terms of the technical side. And Monday, the only thing New Zealand retail sales, not much differences. So there was no trade in the fundamental side. And again, we always want to go from the fundamental side first to see that if you have an underlying momentum. And if you do, then you go to chart and then you start to see if you have a good execution place. And then once you do, then the rest is your money management and your trading psychology, which is probably the most important part in trading. So as you can see, Monday was nothing. Tuesday, again, there's no difference for cable, for British pound. The sentiment was a big difference for euro dollars, but again, there was really no trade in all these things. However, as you can see, the Canadian dollar here, we do have a trade at 8:30 a.m. Eastern Standard Time, manufacturer sale. I'm going back to my note just to see what I did for that for Tuesday. Canadian dollar trade. I have a trade for Tuesday, February 16. So February 16, 1.3811. Okay, February 16, I do have a trade here. So 8:30. So let's dive into it. Canadian dollar. And I remember I did a 5 minutes play. So let's go back. As you can see, this is February 18th, right? So let's go back to 16. And this is 18 again. That's 17. I'm just looking for the 12 o'clock because then it will give me a date. So 16, that's 16. Okay. So 16 at 8:30 a.m. which is right here. All right. So as you can see, this is the candle, right? That's an 8:30 5 minutes candle after this Canadian news come out, and we have a positive news. But again, like I say, I don't really care in this short-term strategy. We don't really care about what's the news reaction, because if you want to trade news and you like to really follow the fundamental side, then that's another different game, because then you cannot just looking at a single economic data, right? This data does not mean anything if you have to look at a big picture of what happened to the actual economy in Canada versus to another countries, and that's where you can find out the long term. So a lot of people, the trader, make this mistake, right? They come into the market and they just waiting for the news and they say, oh wow, 1.2%, that's a good news for Canada. So that means the Canadian currency is gonna go up. Well, as you can see, it's not the case because it does go up, right? As you can see, dollar CAD dropped. That means the Canadian dollar was gaining strength, but it's only for 5 minutes, and then you have a rally. So people who doesn't understand would say, what happened? I thought the Canadian dollar it's gonna be strong, but that's not the case because you don't know what happened before this news data, and you don't know what's the underlying economic situation. So if you are very good at that, if you are economics, or if you really like reading the news, then I'm sure you will know that in the long term, the US dollar is still a stronger currency, it's still a bullish currency compared to Canada. And that's why. But for us, for this kind of short-term strategy, we don't really care because all we want to grab is that few pips during this short-term momentum. So as soon as I see there is differences between the forecast and actual, and just to mind you, tell you why, because you look at the for previous 1.2, actual is 1.2, so it doesn't really change anything, right, in terms of the actual economy, in terms of actual manufacturing sale. However, because of this short-term surprise, that's where we as a trader, as a speculator, having the chance to make some profit. So 8:30, this 5 minutes candle, I wait for it to close, and then wait for the second candle to close above it, right? Now, what does this tell me is I don't really care which direction it goes. All I care is after 5 minutes, is there any candle that close above or below? Where it just tell me that this thing might go up. So again, very simple strategy you can do. You can okay, I'm sorry, just right here. Very simple strategy. Once you see this one close over, you can very simple. You can use a Fibonacci chart. As I mentioned, it's very simple. You put a Fibonacci for the 5 minutes one. And again, then it depends on your own money management. You can put a penny order at 76%, another one at 61, another one at 50, or you can just use 50. Or if you want to be more aggressive, maybe you just keep deep buying until you got stop out at 0%. For me, I use 50% all the time. All right. And the difference is that I get out as soon as it reach 100%, right? I don't like to wait, and I always protect myself. Now in this case, I miss a profit because this one goes up and I put 50% pending order, and then I got filled in this candle. And next candle, it reached 100%, so I set my stop loss to break even. And as you can see, in the next 10 minutes, I get stop out. But then it rallied. Now, this part I cannot teach you because this is really depend on your own style and your own psychological effect, and again how much money you want to make and how aggressive you are. Now for me, the reason I got out and I always protect myself, a few reasons. I like to take a look at a few market conditions. As you can see, 8:30, right? So up to here, I know that the US stock market is going to open in 25 minutes. Now, when the US stock market and when equity market opens, it's gonna be another volatilities, and that I cannot predict, and I don't want to predict it. So that's why for me, I rather move my stop loss to break even as soon as I can before the 9:30 stock market open. Because in this case, you can see 9:25 and all this huge rally, it really has nothing to do with the news anymore. This is the momentum from the equity market. Now I don't know what happened to that day because I didn't trade the equity in that day, but this is the momentum, right, from the stock market. So if you rally on this one, then congratulations, very good. But don't think that this is the effect of the news because you always have to take in consideration of the time, right? Where are you and when are you trading it? So for me, that's why as soon as I have 100%, that's actually already one-on-one risk and reward ratio. And as I mentioned in the previous video, risk reward ratio is perhaps one of the most important thing in terms of trading for me personally. So once I have one-on-one, I set up my stop loss to break even, and I got stop out, which is fine. I have no problem with that, and I missed this profit. You know, back then when I was still a relatively new trader, I always kick myself saying, "Oh, I lose this part." But the thing is that this thing might turn out completely different, right? You might get filled, and you didn't move your stop loss to break even, and then it stop you out. Then again, you're gonna kick yourself. So they both are right, right? I never judge a trader on his style of trading or how long he's gonna hold a trade because it's hugely depend on your own situation in life. Do you need the trading profit? How badly you want this money, this day in, day out, or is protecting yourself more important than anything else? For me, I have suffered a lot of big losses from my early days in trading. So right now, my number one rule is really cut my loss short and really protect myself. So I don't care that I didn't make money in this trade. I'm happy that I protect myself because as soon as I move to stop loss, at least one come back with this big bearish candle, I was happy, and I don't care what happened after, right? I protect myself, and that's it. So this trade, I did not make any money, break even trade. Now let's move on. So that's the only trade on Tuesday. Now, GDP price index, this one, I don't remember if I traded. Let me take a look. New Z, right? New Zealand dollar. Let's see. I didn't see anything here, there. Okay, so I did not take this New Zealand dollar GDP price index. That probably means two things. There was no action in a technical chart, or the action was less than 20 pips. Because remember, I have this one rule. If the news candle 5 minutes is less than 20 pips, then I don't want to take it because for me there's no action. There is not enough momentum for me to risk money into this trade. It's all about probability, right? So if I don't see it's good enough, I don't want to risk any money on it. Wednesday, we have a climate count change. This one is a huge difference. Look at that. Negative minus 0.9K, that was a forecast, and then we have minus 14.8. So I remember it was a huge volatile day for British pound. So first 4:30 a.m. I want to see if I took that one as well. I don't see right here. I'm checking my Evernote. Okay, I see it. February 10th. No, that's the other one. So I didn't took this one. I don't know why. It's probably the technical part. But let's take a look because it's frame, right? 4:30 cable. So that's sorry, that was February 17th, 4:30. So let's go to February 17 again. Sorry, I just have to track back because this is all live, right? I'm not, again, all this webinar I'm doing, I'm not planning anything. This is exactly what happened that day. I'm just telling you what I did, and hopefully you can learn something from me. So 4:30, that's the one. Look at that huge. How many pips is it? 149.95 to 140.53. That's about 42 pips in a single news event, which is a lot. So this one, I think I did put a 50% right here, but again, of course, you can see I did not get filled. So let me draw it so you can see more clearly. If you put a Fibonacci chart here, that's a 50%. So 4:30, 5:30, and 6:30. For me, it's too long, so I just get out because as you can see, 7:30, 8:30, that's almost 4 hours you haven't get filled. So the longer you are away from the news events, the less momentum and effect it has for you, right? So you have to always remember when you're doing this kind of short-term trading, betting on the momentum of this news, you want everything to happen, best scenarios within first half hour. Now, generally, if it's after an hour, let's say if it's 4:30 and right now it's 5:30, I'm still not in any trade, I'm still holding a pending order, I would pretty much consider to get out because for me, whatever happened, if I get in, right now it's another effect from another news event. And remember, I only opened the important news right here. That means we don't know what happened to the global market, right? I don't have a live news feed. So we don't know what happened unless I keep monitoring it. So this effect, look at this. If you get filled, let's say this trade, all right. If you just keep holding it, you say, okay, I'm just gonna follow this strategy 50%, and you get filled and you get stop out. But as soon as you get stop out, it's rally again. You say why? Because again, 9:30. So this rally has nothing to do with the 4:30 news anymore. This is a stock market rally. This is a U.S. equity market momentum. So do not underestimate the importance of time. The timing is very, very important. Generally speaking, I get out if there's no action within 2 hours. But if there's no action within 60 minutes, you can get out basically. Again, in my previous video, I mentioned trading is about making money in the shortest amount of time. If you have to trade and being in front of a monitor for 8 hours, it's just like a second job, and you don't want to do that. And I personally don't want to do that. 830 US dollar building permit. There's no surprises. This one we have a surprise in the PPI production data and 0.1 negative 0.2. Let me see if I took any trade in this one. checking out my note. I don't see anything, so again, that only means that the technical part was probably not good enough. And 730 Aussie dollar, that's a good one. Look at that, minus 7.9K versus the forecast of 12.9. Huge difference for employment change, negative for Aussie dollar. Unemployment rate was also bad, so another negative news for Aussie dollar. So 730 and February 17th. Let's take a look. Let me check my Evernote just to see which one I took. Okay, Euro Aussie is the one, and Aussie Young. Okay, so this is an interesting one because I actually got filled in two pairs. Generally, that will not happen because I have an order cancel all at my interactive broker. However, if the currency spikes very fast, then sometimes you will get filled in both pairs. So now, however, the good thing is that you're not gonna get filled in the full lot in both pairs. So let's say if you have 100K one lot in Aussie Young and another lot in Euro Aussie, and they both filled, you probably get 50K on Aussie dollar and 50K on Aussie Young, right? You're not gonna get two lot. You're gonna get half lot plus half lot. So it still end up as one lot. Right, that's a good thing because you always want to take consideration of how much percentage per risk capital that you are risking in every single trade. So you can take a look at different currency pair in terms of news events, and then you can enter pending order in all of them. But remember to put an order cancel all symbol so that you don't get filled because a lot of people don't understand. They want to make any money they can, and you have to take consideration if you risk 1% per trade and then you get filled in three pairs, that's 3% on the table. That means you are actually risking 3% in one news event, which for me is a very big risk because if you lose 3% on that day. Sorry, not on that day, on that one news event. You have two or three news events, just multiple by that, you might lose up to 9 to 10% in one day. That is very, very risky for my trading style. So let's take a look at this. Aussie 730 and February 17. So February 17, let's go back. 18, 17 is here. 7:30 p.m. Oh, as you can see right now, that's the one. Aussie Young. So that's the one I took. Again, 5 minutes. I wait for it to close down right here. I put a pending order, and again, I get filled, and I moved to stop loss very quickly and got out stop at break even. So as you can see, as soon as I see this green candle, I put a pending order at 50%. I got filled on this spike, this one, and then reach 100%. So I moved my stop loss to break even, and then I got stop out at break even right here. So of course you can say, oh, but it worked out at the end. Again, I don't care about that. And look at the time, 7:30, right? By the time it worked out, let's say if you were aiming to make 161.8, that's 3:30 a.m. already. So you're actually waiting for all this time. And again, it's not this momentum, this downtrend momentum is not it's not a news momentum anymore because right here you have a London market open and that's the London market momentum. So you don't want to risk anything in that scenario. So again, for this one, for me, it's a break-even one. The other one I say I did was Euro Aussie, still February 17 at 7:30 p.m. So let's go back to February 17. Oh, I think it's this one. Yep, February 17. Same scenario, you get a huge spike up and goes down. So this one is exactly the same thing. I got filled at 50%. It reached almost again. You need to see I move my stop loss to break even just right here. Because for me it's good enough. That's 100%. I'm shorty about there, and I got stop out at break even. So again, if you say, oh, but it works at the end, it does not work at the end because again, this is 2 o'clock a.m. Eastern Standard Time, pre-London market open. This is not the news momentum anymore. You don't want to be in that trade after hours, 1 to 2 hours after news event. All right, so let's keep going. February 17, February 18. We don't have anything. We have unemployment claims. There was some differences, but not enough for me to take it. It's not a big surprise. Less than 20%. Crude oil, I generally don't trade it because there was not really it's not really a surprise most of the time. Right? Most of the time, you don't know where it goes and what people react to it. It's not as big events as unemployment claims. So I generally don't trade the crude oil inventory. Now, Friday is today, which is a very terrible day for me, and I tell you why. Uh, we have British pound retail sale and Canadian dollar and Euro, US dollar. Look at that. There's a huge differences. Retail sale, British pound, and let's just say if it's if you do cable, right? Today 4:30 is this one. So if you do this one, what would you do is you put as soon as you see this candle, you put a Fibonacci chart into it, and then you will get filled for sure because of this tail 50%, and then you'll get your 100%, and it will get to 161%. So at this, of course, at the end of the day, it goes back to stop you at break even. But you will get this this is 2 to 1. So you will get this if you risk 1%, you'll get 2% for this one for sure. However, I did not take this one because I slapped in, and that was a very very bad thing, and I was very frustrated today because I slapped in. Now this is what happened. You will have all week of news that you did not make anything. But if you are not persistent enough for this kind of news trading, if you decide, you know what, it's Friday, I'm tired, I'm not gonna do it, this is the day you make money, and this is the day you miss making money. And that's why it's terrible, because let me tell you one thing, trading is hard enough, right? To battle in the market and trying to make money is very hard. You want to eliminate any human error that you are any possibility to make. So you don't want to trade when you are sick. You don't want to trade when you are tired, and you definitely don't want to trade when you have like unstable internet connection, or when your wife or your husband is yelling at you, you're dealing with kids problem. You want to trade with a sounding mentality, with a physical health, and basically it's like you're going to a battlefield. You want to be 100% prepared. So the reason is because you want to eliminate all the human error in terms of trading. Again, I repeat, because trading itself is hard enough. You don't want to go to a battlefield when you are not prepared. So for me, I slap in, which is terrible, and that's why I missed this one, which I could have made 2%, right? 2% of your account size, just calculate on yourself. So that's a 2% missed profit for me today in this news. Now let's take a look at that. So Canadian news, not much difference, especially I have a mixed review, right? So generally when I have a mix, see I have a core CPI is a positive, but the core retail sale is a negative. When I have one positive, one negative in one currency, I generally don't touch it because it's just too mixed, right? Unless I have a huge surprises, which I do right here as a Canadian dollar. So again, we can take a look at that. This is 8:30 Eastern Standard Time. So that's the one, right? 8:30. As you can see, I would not make any money in this one because 9:30, 10:30, I wouldn't get filled. So Canadian dollar, I wouldn't have anything to do. However, the US dollar CPI and core CPI are both positive, right? So if we take a look at euro dollar at 8:30, which is this one. So what happened is that you you might or you might not get this one because this one 5 minutes, it does close above. If you put 50%, why do I say you might not? Because this is just barely at 50%. So you might get filled or you might not. But if you do, hey, look at this, you make very good money. But if you don't, that's fine. That's just a part of the game. But I'm going to be very honest with you because a lot of people would like to show this kind of chart in all those trading seminars and telling you like, oh, you can make money here. But I'm going to tell you honestly, you always have to take consideration of the spread because it looks very good in candlesticks, but you don't know how low this tail went. So you might get filled at 50% or you might not. And that's the thing you always have to be fine about it, which is missing a profitable trade. Now, however, what is not fine is that if you miss a trade because you slap in, because you forgot to set up an alarm, or because you just completely being a slacker, that's not fine. Because that's what I keep saying. You will always face a lot of emotional events in terms of market, right? For example, this one, if you did not get filled and then it turned out to be a winning trade, of course you're gonna feel bad. Like I'm pretty sure I'm gonna feel bad, even though I've been in the market for the past 10 years. I'm still gonna feel bad in this kind of emotions. So not to mention, if you miss the trade because you yourself are not competent enough, then that is a big error, and that's something you have to fix. And that's something I'm still constantly fix in my 10th year of trading career. I still happened, still slapping, forgot to set an alarm, or the battery was out of order, things like that. It all happened. That's just part of life. Uh, However, the other thing, I actually, again, I did not do this one, right? But I did wake up late, and I was lucky because my one of my setup is still working at 8:30, which is the reversal double bottom setup. So the 8:30, I see this one. You see all red candle, red candle, red candle, red candle. So it's been downtrend for the past 5 minutes, and now I start having this kangaroo tail consolidation. So I actually bought at 1.1068. I actually bought at the low of the session, which is fantastic because look at that. It actually went up to 1.1110. So it went up to another 30, 40 pips. And my stop loss was only 10. So I could have made, 3 to 1% in this trade. And guess what happened? I did not. Why? Because I pressed the wrong key. And why did I press the wrong key? Because I slapped in. Now that's what happened. I wake up very late, was very rushing to my trading desk, see this opportunity, jump in on time, which is very good. That's my trader instinct. But I pressed the wrong key when I tried to set up my profit taking, which is right here. I tried to take a profit at 1.1092 and I accidentally entered 1.0092. So of course I get out immediately and I made 2 pips, right? Which is it's just like break even. I make 2 pips where I could have made 3%. And this is not just wishful thinking. I'm just telling you that according to my own strategy, I would set up my stop loss to break even when I have 10 pips, and I'll just let it run until I hit my profit target. So that's a 3% loss or 3% profit that I could have made in this one news. And if you remember, another 2% in this cable news, in this British pound. So in this one day of sleeping slap in, I have lost an opportunity to make 5% of account growth today. Today this will be a very good week for me. I mean, this will be a nice week with another 5%, 4% account growth, which is regularly what I try to aim for, and it did not happen. Why? The market did give me opportunity, but I myself as a trader made a human error. And that's the lesson I want to share with you. If you are into this trading game, this is for a long term, and you really want to have a good habit from the beginning. And the first thing is that you have to be persistent. You have to be in front of a market every single day, regardless of any action, regardless of you make money or lose money. You have to be there because this, again, guys, this is not like any other business, right? You don't force a trade. You can force a sale, right? You can make 100 phone calls, 100 cold calls, and try to get one client. That's business, and I understand that. But in terms of trading, you just have to wait patiently because you don't know what opportunity the market is going to give you. And if you become impatient, or if you decide that, oh, today I'm too tired to trade, that generally is the day that market gives you opportunity. And that's the pitfall of trader. So again, that's my weekly recap. I hope you learned something from me. And if you have any question, feel free to comment below on YouTube or just email me. And I will have another weekly market recap trading video in this weekend. You can just stay in tune. Otherwise, it's Friday, market is almost closed, so I guess have fun. Don't stay too long in front of computer. Have another life, have a balanced life that's gonna help you in trading in life as well. All right, thank you very much. Have a good day. Bye bye.